Hello, everybody, and we're so glad that you are joining us today for our Learn at Lunch webinar, joined by Owen Smith with Hilb Group. Today, excited to be talking about a new benefit that we are adding to our existing group life long-term disability and AD&D policy. We, as of May 1st, have added short-term disability to this coverage at no additional cost to our employers. And we are just so excited to be able to review what this means for people who maybe are already enrolled in this benefit, but even those who aren't enrolled and might see this as a great addition to their benefits portfolio. So I'm going to introduce Owen Smith. Owen is with Hilb Group. He helps us manage all things insurance. And Owen really helped find us this great product that we're excited to talk about today. So we're going to go over everything in general, and I'm going to pass it over to Owen.
Great. Thanks, Jenny. Good morning or good afternoon to everybody on the call. Again, my name's Owen here in Richmond, Virginia, and happy to review and provide a quick refresher for some of you, or maybe for others, maybe the first time hearing about the benefits that are offered by Church Benefits Board. So I guess, first of all, let's kind of break down the existing coverages that have been in place for quite some time. So again, some of you on the call may already be enrolled in these particular next couple of slides. All of the benefits that we're speaking about today are with a carrier by the name of Reliance Matrix. They're a very large national life and disability carrier. So that is the name of the insurance carrier that these benefits are with. The first one that we'll talk about is the life and AD&D insurance. This covers a member for any type of death, whether that be a natural death or an accidental death. The benefit amount is based on your compensation. So it is a multiple of your compensation. You can see there on the second bullet point, it's 4 times your annual compensation. So you would want to think in your mind, what is my annual salary, my annual income? And you would multiply that by 4. So for an example, if you earned $50,000 a year, then your life insurance benefit would be $200,000. Now you'll see that it is capped at 500,000. So I know we've got some high earners on the call today. Congratulations. Let's say that you had a salary of $200,000. Obviously, 200,000 is more than 500,000. So your benefit would be capped at 500,000. So it is going to be, the life insurance benefit is going to be different for each person because it is based on your own personal income. But again, once you determine what that is, multiply that by 4, and that would be the life insurance benefit that would pass to your beneficiary in the event of your passing. The third bullet point just reminds everyone that the benefits do begin to reduce at age 70. And this is a very common benefit characteristic of employer-based plans. This sort of helps to keep the pricing low. It limits the exposure of the insurance carrier as people age. So at age 70, your face amount of your policy will be reduced down to 65% of the original amount. So just for easy math, because I like easy math, if you had a $100,000 policy, you turn age 70, your policy would automatically convert to 65,000. Okay. The eligibility is right when you're hired. So, some employers will make you wait for, 3 months, 6 months, a year to have access to this type of coverage. But the way this particular policy is set up, right when you're hired, you have the coverage. And it is guarantee issue. We probably maybe should have put that bullet point on there. That's probably the best thing about this type of policy. Whenever you have these employer paid policies, it's all guarantee issue. So if you are not on this plan at this point in time, and your organization is thinking of joining this arrangement through Church Benefits Board, these benefits that we're talking about, including the life insurance, no health questions, no medical underwriting. So that's very advantageous for folks that maybe aren't in don't have the health of the 20-year-old like we all wish we still had. Um, the benefits do include coverage for spouse and dependent children. So it's a flat automatic benefit. If you have a spouse, he or she would receive a you would receive a $10,000 benefit as the beneficiary if your spouse passed away. So again, if you have a spouse, you can add them to this policy, and if they pass away, you as the policyholder would receive a $10,000 benefit. And then for each dependent age child that you have, they could be added for a $5,000 benefit as well. Okay, so this policy covers you. Again, we talked about the 4 times compensation. So that can be variable depending on your income. And then the spouse and child is just an automatic 10 or 5,000. In that lower left-hand corner, it's very important, of course, to name your beneficiary. So you, as the employee, would name a beneficiary for your 4-time compensation benefit. You can name whoever you want. It can obviously be a spouse, a child, relative, a trust. So as you enroll in this benefit, you are automatically prompted to name your beneficiary. So if you've already done this, then you have already named your beneficiary. It's kind of hard to enroll in the Employee Navigator site without naming that beneficiary. But for those of you that are enrolled in the plan already, that beneficiary is housed on Employee Navigator, and you can change that any time of the year. So if your situation has changed and you need to update your beneficiary, you can do that any time of the year. Okay, I think that's everything with the basic life. Actually, I misspoke. Let's talk about the accidental death and dismemberment, because it's right there staring at me in the title. The accidental death and dismemberment is sort of attached to the life insurance. So it follows the same guidelines as far as the amount. So again, let's use our simple example of I make $50,000 and my life insurance benefit is 200,000. So let's stick with that amount. If I pass away from, natural causes, whatever the case may be, then that $200,000 is going to be paid to my beneficiary. The AD&D, which stands for accidental death and dismemberment, comes into play in the event that you pass away from an accident. So any type of accident that you may have, I could give some examples, but I don't want to be too morbid. But, car accident comes to mind, just anything that was accidental. That means that your life insurance benefit of 200,000 would be doubled to 400,000. So if you pass from an accident, it doubles your life insurance benefit. The dismemberment, so the second D in this scenario, stands for dismemberment. This is very rare, but it is included in the policy. You don't have to pass away for this clause to kick in. This would occur if you were literally dismembered, meaning you've lost limbs, you've lost eyesight, you've lost speaking ability. You've had some type of accident and you've lost an arm. You would receive a flat payout amount from the policy. So you can file a claim and said, hey, I've been dismembered, and you would receive a cash benefit from the policy. Okay, so it's a very interesting schedule of benefit. It talks about arms and legs and eyesight. If you want to see that listing, certainly reach out to the team at Church Benefits Board, and they can get you a copy of the certificate of coverage that tells you exactly what you receive in the event of a dismemberment. So kind of a rare topic to discuss, but there it is. Okay, so let's move to the next slide. This is the long-term disability coverage. Again, This has been in place, so this is nothing new. So for some of you, this might be a refresher, or if your church is maybe considering joining the program, this would be available to you. Disability, especially long-term disability, I feel is probably one of the most important life planning vehicles to obtain. When you think about your ability to earn an income over your lifespan, certainly we hopefully have some young folks on the call, but even if you're, 50, and I'm not judging because I just turned 51, 50, 60, these are important things to think about if you were disabled for the rest of your working career. Okay. So long-term disability insurance is designed to replace a portion of your income. And you can see that the third bullet point is this is going to continue to pay you all the way until age 65. And it stops at age 65 because that's generally the age that Social Security retirement income kicks in. And so a long-term disability benefit is going to cover you through your work earning years. And it generally ceases at your Social Security retirement income start date. So again, this is going to be based on your earnings. So you want to think about what you earn per month. And that number would multiply that by 60%, and that is going to be the long-term disability benefit check that you would receive directly from the insurance carrier, which again is Reliance Matrix. So people are disabled for long durations for all sorts of reasons. Some of the more common examples I use is, a cancer diagnosis that maybe has a year or two of treatment, and maybe you're having surgical procedures and recovery and chemotherapy, and you may not be able to work for a year or 2 years. So the long-term disability would kick in to cover your income during that recovery period. There's other situations that are a bit more extreme where maybe you've had a major car accident, and you are, have a brain injury, and you're not able to perform the same job function that you were prior to that accident. Maybe you're in a coma. Maybe you've, had a serious paralysis situation. So, really depends on what the incident is. But if you're generally unable to perform your job duties, then the long-term disability benefit would kick in for you. The long-term disability starts after 90 days. Okay, so we always talk about the date of disability, and we could use that as the date of a surgery or the date of an accident, or whatever sort of caused your disability. We call that the date of disability. And you would add 90 days to that date. So if you had a car accident on May the 1st, you add 90 days to May the 1st, and your benefits would begin on that 91st day. So that's a general overview of the long-term disability. I think we can go to the next slide. And now I will introduce the new benefit that is being added, which is the short-term disability. This is brand new. So again, if you have been in this program, your church has been in this program for some time, you have not had short-term disability. Or if your organization is considering joining for the first time, you're going to come in and you're going to have all three of these benefits right from day one. So the short-term disability, as Jenny mentioned at the top of the hour, was added May the 1st. So we are still, in a brand new period of having this policy available to everyone. And this works in a similar manner, but this really covers the time period that you previously didn't have coverage when you had to wait those 90 days. So we're talking about that time period before the long-term disability kicks in at the 91st day. So what does short-term disability cover? Kind of the same scenarios as the long-term disability. So, maybe you've had a diagnosis and you're being treated for something. Maybe you've had a serious accident. When we get into short-term disabilities, again, these are more immediate uh, conditions and diagnoses and treatments. So think about your outpatient surgical procedure. Think about, you've slipped and fell and broke your leg and, you're out of work for 3 or 4 weeks. So these are the types of disabilities that now, as of May the 1st, you can file a claim and receive a short-term disability benefit. This is going to be paid directly to you. Um, the benefit, as you see on the first bullet point, again, 60% of your earnings. Now, long-term disability kind of looks at your earnings on a monthly basis, and it issues you a monthly benefit check. But when we talk about short-term disability, we're looking at your weekly earnings. And if you were disabled, you would receive a weekly benefit check directly to your home address. So again, think about, what you earn per year, divide that by 52 to get your weekly earnings, multiply that by 60%, and that would be your short-term disability benefit. Now, these benefits are not going to start on the very first day of your disability. That does tend to be a pretty rare and expensive policy because then you've got people filing claims for, I've missed 1 or 2 days of work. We have a 14-day waiting period. So in the example of, I'll just stick with the car accident. If you've been in a serious accident, maybe you were, in the hospital and you had some surgery, pretty long recovery period. The first 14 days are on you. Okay, so vacation time, sick leave, whatever. The first 14 days are on you. On the 15th day, that is when the benefits would begin. And you would receive 11 weeks of disability coverage. So 11 weeks of benefit payments sent directly to you. As you can see at that last bullet point, the benefits begin on the 15th day, regardless. You could be filing a claim for an illness, which would include, treatments, and you're just out of work because you're so sick, perhaps from the treatment. Surgeries, outpatient procedures, hospitalization stay, maternity leave is included as a disability reason. Okay, so we could go back to federal law and say that decades ago, federal law stipulated that maternity is treated as any other illness. So if you are disabled through the event of a maternity situation, your doctor maybe provides or stipulates additional bed rest before the delivery date. That would be a reason to file disability uh, disability benefit. And then certainly once the delivery occurs, whether that be a normal delivery or cesarean, then that is the certainly the start of the disability benefit from that point as well. Again, you would have to wait the 2 weeks, the 14-day waiting period, and then the benefits would kick in for 11 weeks. Okay, so again, there's really no exclusions, no pre-existing conditions, which is quite rare. A lot of times policies will include pre-existing condition limitations. So, we'll have a Q&A at the end if you have questions about that. But the easy answer is there are no pre-existing conditions limitations. So that just makes the answer to any questions about that very simple. But again, feel free to speak up during the Q&A session. So I believe Jenny is going to take over on our next slide, if I'm not mistaken.
Yes, thank you, Owen. So we're thrilled to offer this short-term disability within this bundled insurance package, and for many reasons. And one, because we do feel like it helps fill the gap between that waiting period of the long-term disability, which doesn't kick in until 90 days. So this image here just helps you show how that short-term disability helps fill that gap between that long-term that kicks in 90 days. And another reason we are thrilled to offer this is because it does offer that maternity leave component. We really hope to begin working with churches to help them see the value of how this can help them offer paid maternity leave for their staff. It shares the cost for the church, so they would only have to pay 40% of the employee's pay, while this short-term disability would pick up the other 60% for that 12-week period. So we're really excited to be able to offer this for many reasons. And the maternity piece is just icing on the cake for us because we know how important it is for mothers to be able to take that time to recover and bond with their new baby, and the family unit as a whole to have that time together. So we'd like to kind of go through shortly, just if you are currently a participant within our group life insurance, long-term disability, short-term disability policy, we wanted to go through the enrollment process for you. Um, if you are currently existing, then this will just pop into your existing policy. Nicole, you can go to the next slide for me. Um, if you're new to CBB and this is something that you want to encourage your church to provide for you, then you would simply complete our interest form and let us know that you're interested. We'll schedule a meeting and talk through the enrollment process with you to get this initiated at your church. Um, and simply, if you're already with us as a church benefits board church, then you would simply go and fill out our enrollment form, which is on our forms page. My team's dropping that into the chat as well for you. And you can fill this enrollment form. It's simple, one page. Again, as Owen mentioned, there's no medical underwriting or questionnaires. So it's just one page to help us know what church you're with, and what your compensation is, since this policy is dependent upon that base for your premium. And that's one thing we haven't covered yet, what the cost of this bundle is for churches. It's employer paid, as we mentioned, and the cost is 2% of your total compensation. One flat rate to receive all of these amazing benefits for you. So if you have any questions about how to enroll or the premium, please don't hesitate to reach out to us through the interest form or through our emails directly. So we're going to go ahead and take a break, a pause, and enter into our question and answer time. If you have any questions, you can use the chat to ask those questions, and Nicole is going to help me monitor that chat as we get into this section of the presentation. So if you have any other questions about the policy, about how to enroll, please don't hesitate to send those our way and we will get them answered for you. Is there a minimum number of participants per employee? Great question. So no, there is not a minimum number of participants per church. If you only have one employee on staff, then you can enroll in this product. All of these products are bundled together, so you can't get one or the other. And the short-term disability is specific to the mother because of the need to have the doctor's note about the delivery. So since the mother is the one doing the delivery, then it does not qualify for paternity leave. But great question. And Nicole, I think you're muted. Sorry.
If I could just add one piece to that question about the
Sure.
paternity leave, because that is slowly evolving across the country, and we're here in Virginia, and our legislation just passed something that is a bit intriguing. So paternity leave, no, that has never been included as part of a disability program, because when we think about disability offered by our employer, it's really covering our own personal ability to show up at our place of employment and literally perform our own job duties. So that is at the root of it. That's what a disability policy covers. paternity leave and all sorts of other things. We are seeing a trend across the country, and again, Virginia just passed legislation that will slowly be rolled out and provide paid family medical leave coverage. And so that is a growing trend in multiple states. I think we're probably up to 13 or 14 states across the country that are starting to roll out a state mandated paid family leave program. And those types of programs do cover paternity leave. So you could think about, FMLA, which was a federal law passed many, many years ago. Now we're starting to get into, and I should say FMLA is certainly, caring for, the birth of your child if you're the male, or caring for a sick family member, these types of things. So now paid family leave is starting to get into the situation where you are receiving compensation for those things that were historically only covered by FMLA, which really just protected your job. So depending on what state you're in, all hope is not lost for that paternity leave benefit. So I just wanted to kind of clarify the two things.
That's great.
Yep.
Thanks, Owen.
Mm-hmm.
So to answer the next question, if you're already currently in our life long-term disability accidental death policy, you're correct. You do not need, there's no action that needs to be taken. You automatically have the short-term disability coverage as well.
And if you log into your Employee Navigator portal, which you should already have access to, you'll see that new short-term disability benefit listed there under your benefits. Great questions. All right. If there are no more questions, we will wrap up this webinar for now. But please make sure to reach out to us if you have any additional questions. Let's see, it looks like there might be. Perfect. That's great. We're glad that this benefit will be helpful for employers who may have reached or received other short-term disability policies for their employees, and now this is incorporated into that. So it saves the employer some costs. That's great. If you have any questions after the webinar, please feel free to send them to our team. We'd be happy to help you answer those and hopefully get these additional benefits in place for you and your church. Thank you so much, everybody.